Hello. Hello.
And that means another not so late night show. Today's company also a highly requested company. You guys might have heard about it. You guys might even are shareholders of this company. So also we are still quite within the tech scene of the Malaysia tech scene companies. But yeah, let us know in the comment section if you want us to change the theme. Since 2020 is coming to the end, do you have any other companies, any other sectors that you want? Of course, we plan to also talk about some of the companies that are in the backlog. Later, after the discussion, we'll probably hint you guys what are the companies that we might touch base on during the last few weeks of 2020. But as of today, Pentamaster, and from the title, you might already see that it has something to do with automated testings and also maybe also automated factory solutions as well. So yeah, let us know in the comment section. But yeah, before we even go into the sharing session, maybe, yeah, let's take a look. Yeah, hi Darren, hi Hui. You guys are very loyal. Thank you very much. And I hope, as always, every Thursday turns out to be a very beneficial 1 hour session where we share opinions and views on the companies that is the main topic, but we also can talk about other companies if you guys have any questions that you want to touch base. Hi, Francis. Good evening. I think that the cases in Malaysia is not so good. I think today is around 2,000 cases, right, Chumbe?
Yeah, today I think it's one of the worst day.
Yeah. So yeah, I hope you guys stay safe. Do not go out unnecessarily. Yeah, and I hope that things really can improve. Else, a lot of Malaysians stuck in Singapore will not be able to go back during Chinese New Year if the situation is continued under the current situation. Hi, Puiling. So yeah, fingers crossed, fingers crossed. And so maybe after we go through today's sharing session, you might have a little bit of so-called feeling that hey, this is quite similar to a company that we previously talked about. Yep, we previously have talked about ViTrox, Berhad, another so-called automated tester equipment company in Malaysia. I think both companies are doing pretty well. Both companies have their own strengths. Both companies also have their own specialty in terms of business segment. They both have their niche. And but at the end of the day, sometimes the one that is tagging on to the fastest catalyst will tend to grow faster. Yeah, later we will dig deeper and see what is Pentamaster doing. Is Pentamaster just following what ViTrox is doing, or is Pentamaster doing something out of the box, different from ViTrox, and will that be a successful venture? Yes, good evening, Intra. So yeah, Chumbeng, if we are ready to go, let me know and I will keep the ball rolling.
Yeah, I think we should start. It's already 5 minutes or 6 minutes past 9 ready.
Okay, here we go. Pentamaster guys, let's go. So as always, thank you very much for being our loyal viewers every Thursday night, 9 p.m. to 10 p.m. And if you are new, definitely give us a like or follow on our Facebook, Instagram, and also subscribe to our YouTube channel. And if you go to our website, which is mykayaplus.com, mykayaplus.com, and then you scroll down to the bottom of the website, you'll see that we offer you an option to subscribe to our newsletter free of charge. And when you key in your email and hit subscribe, we'll give you a free Excel template to help you track your investments. So if you bought a stock, if you receive any dividends, you just key in and everything will be auto-calculated. And by the end of the year, which is coming soon, you will be able to track that for year 2020. How has your investments have been doing? Are you earning a lot of money, or are you still in the red? So yeah, let us know, and that would definitely be, we hope that it will be very useful for you in keeping track of your investments. So as always, the disclaimer, this is purely a sharing session with you guys, does not constitute to any buy or sell decision. We might give our opinions, but our opinions is just our opinions. It may not be the fact. It may not turn out to be the fact also. So we might also be biased. But what we want to show you are the numbers, the business model. Those are not biased. And at the end of the day, if you really like the company, just do further studies. And yeah, we hope you the very best when it comes to finding your next good investment. So maybe Chun Beng, tell us about what is all about today's company, which is Pentamaster.
Yeah, I think if you guys haven't heard of this company before or try to study but then don't have the time, so basically this is a company based in Penang, and then when you heard about Penang, it's all about all these engineering related or manufacturing related company, and this Pentamaster is inside this. Usually we call it ATE. In semiconductor industry is automated testing equipment, and then what they do is beyond that not only automated testing equipments, they also do some automation. So basically they are into this testing and automation kind of business. They got listed in Bursa back in 2004, and then they do another listing in Hong Kong Exchange I think 2 years ago.
I see.
Some sort of fundraising for their expansion. Later we'll share more about that.
So yeah, this is what you will see when you go into Pentamaster's website. And straight away they'll tell you, oh, okay, I do a lot of things, and basically all what I do is split into 4 categories. So at the top here you can see semiconductor and MEMS sensor. So anything that relates to semiconductor or sensing or even testing of it, it's all parked under this category. So you can see down here you have test solutions, you have vision inspection, you also have assembly. The second one would be the optics and photonic sensor. So basically this one has to do with your optoelectrics, your 3D sensors, your light sensors whatsoever, are also quite important factor when it comes to Internet of Things, what else? Mobile phones, etc., etc. So the third one I think would be the one that ViTrox is maybe not doing this one, but yeah, this one, third one, factory automation. So what does this category encompasses, Chun Beng?
Which one?
Third one, factory automation.
Yeah, so beside they are supplying the equipment for the other player to do the testing. Another side of thing is as you can see from the picture, maybe it's a little bit too small. These are like all those mechanical automated arm to do some factories operations. So that's why I call it as a factory automation solution. And they are particularly more famous into this medical industry. They help a lot of manufacturer for medical industry to do all this automation. So this is one of the big thing. And expansion from there, besides this factory automation, is the fourth one, which is some of the solution they build for the medical industry itself. So you can say they are into testing, supplying for semiconductor, automotive, and on a side note, they also supplying some automation solution for the factory, focusing in medicals and some of the equipment for medicals industry. So this sum up what they did. You can ignore all these words. Is quite technical, and you will be confused. I mean, and some of it is even their own proprietary stuff. For example, iArms or whatnot is their product name where they supply to their client.
So I think we have been talking about quite intensively or quite so-called very detailed when it comes to the Malaysia, or not to say Malaysia, but the overall semiconductor value chain overview. So previously in our previous videos, when we talk about Technovision, when we talk about what else, ViTrox, all these kind of companies, they are just a part or small puzzle piece that actually form the overall semiconductor value chain overview. So as you can see, actually, if you want to categorize the whole semiconductor value chain, you actually have the top stream, which is the design, and then also the foundries, the wafer fabrications, and then the midstream, your assembly, test, and packaging, and then up to your downstream electronics manufacturing services, and also then only all these end results or end products gets passed on to the end consumer products. So I think we won't want to go so deeper, but basically what I can tell you in just a very brief, someone's got to design the circuit board, right? Someone's need to design the chips, and the so-called most famous players that design chips are your Qualcomm, Broadcom, Intel, AMD, whatsoever. And once they design it, they won't really build it because they don't have the facilities, or some of them, they don't even choose to have facilities. Players like NVIDIA, AMD, they just design and then they just pass the recipe to someone else to make it for them. So companies like TSMC, SMICs, these are the factories that really make the chips, that really produce the chips. And then as these foundries or factories, when they are producing the chips, someone has to service them when it comes to cleaning their equipment. So companies like Franken and McLean are the so-called few manufacturers that will come into service of your foundries. After that, your chips will get passed to someone else to actually build into a bigger component, your assembly and test and packaging. So companies like Inari, Unisem, MPI, a lot of these are local companies. And you have MCall, which is the so-called bigger ones focused internationally. And someone needs to supply Inari, Unisem, MPI with the equipments to test and also package. So you have companies like Penta, ViTrox, Alsoft, MSSV, me, and whatsoever. And someone needs to also ensure that the chips that Inari, Unisem, all of them are producing or whatsoever, there must be a test socket that connects the chips or the integrated circuit to your ATE. So this is where JFTech and FP Group comes in place. So overall, you can see here, everything is interconnected with each other. If something bad were to happen on the design part or the upstream part, then of course the midstream and downstream players will get impacted as well. So Pentamaster Corp, this is how the corporate structure look like. Maybe Chun Bing, you want to highlight a few important ones that we might zoom into later?
I find it interesting when I look into this chart, because usually in the annual report, they only show the breakdown of different company, but this Pentamaster further break, if you see the top three column, is how they break down the ownership. You have the public share. Of course, it's the people like us lah. If we go and buy them, we are the one that's subscribing to their public share. And then the second one is, of course, themselves, the Pentamaster Corporation Berhad. And I like the third part, which is, I think there must be something they are so proud of. That's why they display it, is they say 6% or 6% of it actually go to the employee. So I think this is quite encouraging. Means you grow together with your company, and Pentamaster has been improving themselves over the past 5 to 10 years. So this employee, if they are early, as in their employee, the first few batch of employee, of course, they must be part of the guy lah. So nowadays, I think it's quite straightforward lah. It's basically different Sendirian Berhad that handle different part of things. Some of it is research, R&D, some of it is manufacturing, some of it is focusing in medical line, but mainly it's 100% owned by them. So I only find interesting is the breakdown of the ownership of the company, especially the employee.
Okay, yeah, that's very true. But I think one also very important thing is the center part here, where Pentamaster Corp Berhad, the company that we can buy, the company shares that we can buy in Malaysia, is actually holding on to Pentamaster International Limited. And this company is the one that they listed in the Hong Kong Exchange back in 2018. So how the company actually got, I would say, reorganized is that Pentamaster International Limited, PIL, and the ones domiciled in Cayman Islands, that one will actually own all the subsidiary Berhad, and then only it gets owned by Pentamaster Corp Berhad at 64.36%. So yeah, later we talk more about Pentamaster International Limited as how the company actually goes about with it. So I think here's the starting to get interesting. You have two key components of Pentamaster when it comes to their revenue breakdown. So the company is doing automated test equipment, ATE, but their company also is doing automation for factory solutions. So you can see, even though company is very proud, growing two segments of this business, but you can see that ATE still plays a very big chunk of the overall revenue contribution. So it's around 431 million as of 2019. And factory automation is just 84 million plus. So respectable, but not as big as the ATE. Yeah. So ATE still is very important to them. And if you look deeper, ATE, basically what the ATE business is more towards the smart sensors for telco applications and also automotive. And it grew 23.7% year on year compared to 2018. And if you look deeper, actually out of this 431 million, big chunk of it actually goes to the telco business. So your smartphones and whatsoever. So that is one of the key catalysts that actually drove up the ATE revenue for the ATE part, which is very focusing on the telco business. So FAS is quite stable. This could be the overall moving forward kind of so-called focus that the company wants to focus on. And actually, one good so-called event that happened was that the company actually bought over one company called TP Concept to further expand into this factory automation solutions business vertical. So let's see, maybe in 2020, the contribution from FAS should be improving with the acquisition of TP Concept. So let's zoom into the industry breakdown. Maybe Chun Bing will take over from here. How big is telecommunications in the overall contribution, and what are the other segments or industries that Pentamaster is very focusing on?
Yeah, when you talk about the ATE equipment for all these players, basically they apply to two key industry. It's telco and automotive. The rest is the supporting one. So a lot of people might think actually this guy tapping on 5G and all those things, which is technically true, because telco is playing a big part of enabling the 5G. So that's why we need to drill down into the industry breakdown to know what is the outlook of the biggest contributor, and then is something that we should look forward to. And then I would say maybe Pentamaster is definitely on the, how to say, is on the right track, because automotive is also going to some of the revolution, moving from the petrol-based vehicle going to electric or hybrid-based. So I think all this is some of the exciting stuff that is coming in, and definitely they need some devices, and the devices need to go through some testing, and all this is related to build up the performance that Pentamaster has been showing these few years.
Cool. And I think that one of the key exciting parts is that automotive actually grew quite a lot from 46 million back in 2018. It went up to 70 plus million. So the contribution also went up from 11% to 14%. And you also look at the consumer industrial products and also the semiconductor portion. Okay, maybe semiconductor got corrected a little bit down, but the consumer and industrial products, your IoT stuffs, that is also playing quite an important role. And hopefully for year 2020 annual results, we want to see automotive and the consumer and industrial products showing equal growth momentum, so that it cancel out the heavy reliance on the telecommunications. Because as we know, 5G is on the verge of launching. Of course, there's still some groundwork need to be done. But once 5G slowly gets adopted, you want Pentamaster to continue to grow. The telecommunications part will not continue to grow so much. Once we hit 5G, we might come to flattish kind of growth. And then your other portions of your industry have to continue to grow momentum to ensure that the company can, report higher revenues, and then the share price can only tag on and grow higher. So I think also one of the key important things that we found out was that when you look at how or where the customers of Pentamaster is, you notice that almost 50% of it is coming from Singapore, right? So Chun Bing, anything you want to share with our audience on why Singapore is almost half of it, and other countries is just normal, but you have Taiwan and also China there as well.
Yeah, I think we also spent some time trying to find out how come it's actually coming from Singapore, where you can relate, like if it's come from Taiwan, it maybe makes sense, or even Japan or China, but why Singapore? So I think this is related to some of the latest slide that we're going to show, which is the top client. And then basically this top client contributed a very big percentage of it, which you can see it here. This client is actually from Singapore, contributing more than half. If you see on point number 1 is 52.6% of the total revenue. And then Jupan went on to dig the information, and then I think we managed to find something related. So probably Jupan, you want to share how we actually find out all this information?
Okay, so if you read through the annual report, right, you just get customer A, customer B, customer C, and then they'll just give you, these little pointers like customer A is getting ITE and also the FAS from them and whatsoever. So how I come across who customer A is basically I went and checked through their IPO prospectus. So they listed PIL, your Pentamaster International Limited, Cayman Islands in the Hong Kong exchange, right? So that IPO prospectus, they give more information. So I try to link back everything. I cannot be too certain, but how I tie it back then, this 52%, more than half of it is coming from a Swiss exchange listed company, and this company is an optoelectric company. So this company is quite big in the optoelectrics and supply a lot to the mobile phones and also the telecommunication sector. So everything jives with the information that Pentamaster is trying to hint. They never tell us the name, but so far so good. It is a Swiss exchange listed company, and it's in the optoelectronics. And if you just look at the 5 largest contributors of the so-called customers, Pentamaster relies on 77.8% of the total revenue. We rely on these 5 customers. So anything bad were to happen to these 5 customers, or even one of them, it would be quite significantly impact their so-called growth prospects and also their growth results in the coming quarters. But I think if you look at it another way, I think the Chun Bing always like to say is, if you are really that good and people trust you so much and lock in so much sales, if you must really mean that you are doing a very good job. And if the company is still in a very growing phase of the business, say for example science and technology or tech, so you won't be so scared that the company is in a sunset business or so-called obsolete business. So it's all still quite very bright and rosy, and it shouldn't be too afraid about the heavy dependence on these 5 largest clients that Pentamaster is relying on. So I think talking about the Hong Kong exchange IPO, maybe Chun-Mei, you want to share with us what actually Pentamaster did and why did they went for IPO in the Hong Kong exchange?
Yeah, I think if you can see from the screen, if you're in front of desktop, then maybe easier to see lah. But then basically this is the breakdown of the amount they managed to raise from Hong Kong exchange and what they plan to do. So the first one is actually some capital investment lah, for expansion. So I think this one play a big part of it. It's about a lot lah. If you talk about Malaysia ringgit, it's about 45.8. Over 2.6 is about half of it lah. It's for expansion in terms of production plant, which is something that Pentamaster, I mean, this kind of business need the most. And then they also make a quite interesting statement that they wanted to use this money to expand it into Greater China region. But of course, it's not really reflected in the result yet lah. As you can see, year in year, all those things, China, all those things still didn't see a significant increase. But then if this did turn well, and in fact they are listed in Hong Kong, this might be a good signal few years down the road. And then the rest is nothing much. Is they wanted to establish an office in California, nothing much. And then a few things is working capitals and also marketing. I think that one is quite standard lah. Usually when you raise fund, part of it will go for working capital and some for marketing. So I think the key thing is really the expansion into Greater China region, but then it didn't really reflected yet lah in terms of result.
Yep.
But of course, they haven't really utilized as of 2019. 2020 should be the year that they start to use it in theory. But then, of course, pandemic, all those things pull it back a little bit lah. But this is something that we should really take a look into it, because they literally raised the fund to do the expansion.
Cool. So this is a company that wants to establish itself in the US and also China. So it's very, how to say, it's if trade war were to go on, I think this company could get market share from both US and also China. I mean, they are quite good at what they do, and then they have been around for quite some time already, and you can see that some customers even willing to grow their reliance on Pentamaster. So I would say if trade war were to continue, it doesn't mean that most companies will suffer. Some companies, like previously we talked about it, FP Group is also one of the key beneficiaries. If the trade war were to continue, things are uncertain. So we just need to wait and see what Joe Biden will do when he becomes the president of the United States. But moving on, after we talk about how diverse is Pentamaster's business model, which are the key countries that they are in, and which are the key verticals that they rely on. Now it's just to look at their so-called growth and also their income statement. So you can see as of 2020, it has already been 3 quarters past. The company is currently doing around 300 plus million. If you look at the maths, due to a more challenging year, I think that it wouldn't be possible. It could still be possible if the last quarter would be a magic quarter for Penta. So you can see their 2019 revenue is around 490 million. So for 2020, the last quarter to catch up, you need to hit another 190 million. So it's around 60% more of their current 3 quarters combined. So can they do it? Can they not do it? Profit margin seems a little bit okay, flattish around 16.9 and 15.8. You might also want to check on the upcoming profit margin. As we all know, USD has been weakening a lot, and this company probably would do their business in denominated in US dollars. So yeah, you might take a look at that and see whether Q4 might deliver better revenues and also better profit margins as well. But I just apart from that, I think if you just look at how 2020 the year has been, some companies have not been doing well. Some companies until now still haven't recovered. your tourism companies or your airline companies. So I would say it's a commendable kind of 2020 kind of results for Pentamaster already, judging that they are in a tech scene and tech has been booming. So I think this one is also another impressive balance sheet of all the companies that we have touched base on. But Chun Beng, you want to walk us through how great Pentamaster's balance sheet is?
Yeah, I think if you follow the information in the slide from 2017 to 2019 up to Q3 of 2020, the cash and cash equivalents portion is keep on increasing, especially from 2017 to 2018. But of course, this is the time that they go and get listing from Hong Kong Exchange. But ultimately, besides raising funds from the public, they don't really have any debt. If you compare the debt to asset percentage, I think is 0.5. If you take the latest figure, which is Q3 2020, super low. This guy don't have any debt and have a lot of cash in hand. So I think fantastic. Whatever thing that hit them during this year, they have more than enough cash to turn it around and then back to glory in maybe next year onwards.
Yeah, I think just quite very unbelievable that companies can just grow and grow and grow and just accumulate so much cash, and business is still very good, guys. For Pentamaster, I mean, yeah, I look at how they are doing in 2020 for the 3 quarters compared to other companies, compared to your cyclical companies, compared to your oil and gas companies. This company is just one of the top with the other top companies that we have also mentioned. And last but not least, you can see here the cash flow statement. Blue bars just show you how much cash the company has been generating. So it grows in tandem with the profits. So every year, 2017, 2018, 2019, you can see the blue bar getting higher and higher. It means that company is bringing in more cash. And that means you can see that the balance sheet, there's also more cash from the balance sheet portion as well. And if you look at the investing portion, which is the red bar, you can see the red bar actually got bigger and bigger in 2019. So what happened in 2019? So you remember just now we talked about how Pentamaster wants to focus into growing their new, not to say new, the more promising vertical, which is the factory automation kind of solutions. So they bought this company, acquired this company. It's a subsidiary now under them, the TP Concepts and Yuan Berhad. So this company is going to help them to grow the automation solutions part. And because the company spent money to acquire the shares of this company, that's why your red bar portion is there. So cash outflow to buy or a new company. And you look at 2018, there's a very big yellow bar there. And that means that money is coming into the company. And why is it? Because the company in 2018, they actually listed a portion of their shares onto the Hong Kong Exchange. So that is where your huge chunk of money is coming into the company. And the company is going to use this cash to actually penetrate into China, have a new office in the US, and also for other expansion purposes and also for working capital purposes. Straightforward, good business, and very, very healthy kind of balance sheet. So what are the key things that could actually pivot or to make things even more brighter for Pentamaster Jun?
So you can see the prospect here, it relates back to what key industry they are serving. Of course, they are part of the value chain. I mean, if you can see from the overview that we have shared, they are not into the very downstream. They are in the mid to upstream kind of thing. That's why their margin is 15% and above. Not super good like JF Tech that can hit 30%, but it's relatively well from a manufacturing company perspective. And bear in mind, they are not the guy that claim that they have a lot of IP and all those stuff. They are pure factory in a way, but they're serving some of the industry. That's why the left and right item is basically the two things they are serving, which is the industry 4.0 concept that will take the world. Certainly need more upgrade in terms of devices and also sensor and so on. This one is something related to them. The electric vehicles also one of the things that coming up, and then if you can compare that, the result they have is also showing positive from a year-on-year perspective. So these two is big, and then like what we say US China continue to fight, meaning there will be two group of people trying to do the same thing. This is trade war, cold war, whatever war you want to call it. This is the reality like back in the last time the Cold War is the Soviet Union and US. One guy, they will compete on, let's say, send someone to the moon. So you will have two group of people didn't share any knowledge, try to do the same thing. And you as the supplier of a small part of the value chain, you need to supply both sides. So I think this is a good, good for them, not good for the entire world, because your progression will be small, will be much slower because you didn't collaborate. Like if you have open source, then a lot of people can collaborate, then things can move faster. So this is the reality. But in terms of Pentamaster, this should be the one that benefit from this war.
That's very true. And as much as we want to say that things are all sky blue, everything is a perfect weather for Pentamaster to continue to climb higher in terms of their performance, in terms of their share price, there's also risk. And the risk could be a big one, as because it's a tech company. So technology can become obsolete. And of course, they still need to retain the best talents that they have to ensure that these talents are contributing to the company. So you want to hire smart people to work for you also, right? And of course, there's also competition out there. I would say that if the path actually cross intersect, I wouldn't think it's a bad thing to have competition. But if the company really, one thing, if the technology becomes obsolete and then suddenly appears another competition, that combination would be a very bad scenario for Pentamasters or for other tech companies in general. And last but not least is the IP. So when you talk about how companies come up with the testing methodologies to actually input into their testing machines, it is so-called a kind of IP. This is the way that the company has finally cracked the code on how to test a certain chip or certain circuit, and they would be very kind to actually let their competitors know, because once the competitors know, then you just copy the same thing. And if it's not protected by a patent, then you have a lot of copiers everywhere, and Pentamaster would not be able to sell their products or their services at a high price really, because everyone can do it. And you just need to find someone with the cheapest solution, and you can get the similar result or the same result. So these are the key risks that you might want to take a look or consider before you actually invest into Pentamaster or other tech-related companies. So last but not least, good company, good balance sheet, good cash generating abilities, plenty of blue skies, but valuation. Juming, what say you? PE ratio of 50 times, and then the expensive stock. But what say you, Juming? Oops, I think Juming is a little bit. Yeah, Juming's back. So yeah, Juming, what say you? Good company, but trading at 50 times PE.
Ultimately, usually high PE either relate to good performance over the years, and also their control in terms of some, as in their so-called unfair advantage. But I think one of the key things you should really consider is the profit margin that they're able to produce. So regardless, I think they are hovering about 13 to
15,
14 up
yeah,
to 17 max. So this is the reality lah. This is how much they can go. What they can do is actually expand the market, which they have been doing it from the past 5 years or 10 years. But can this continue or not? It really depends. So for me, maybe PE 50 is slightly high from my opinion. But bear in mind, their balance sheet, all those things is fantastic lah. So for me, is the only thing that you should take note is, are you confident in the so-called expansion into Greater China region, which is they have 20 million allocated for it lah. It can be 20 million to set up a sales office, set up whatever stuff, not set up the plant itself. So the plant itself got 40 over million that has been planned, and some of it has been utilized. So is this 20 over million can bring them to the next level or not is the key thing that justify back the 50 PE. From the current performance and the margin, it won't go far, but it's the expansion that make the difference. Because if you manage to enter China market and the absolute value will go up lah. You maintain a 17% margin, but then you double the revenue. It's a big thing. So I think that's why it's still hovering at this PE, which people like. I think a lot of people say stock market is forward looking. A lot of people are banking on this lah. That's why it can it can maintain at about 40 each, up to 50 to 60 PE for this stock.
Yep. I think you are right, and also we talk about just now that the company is also looking to diving into factory automation and also EV. And if you guys have been following the EV news, I mean companies like Tesla, NIO, and the other China EV makers, slowly all of them, a lot of them are actually climbing up. And in terms of breakthroughs, in terms of models coming out. So, and going to China and focusing on EV and also the other factory automation is a very big catalyst for companies like Pentamaster. But of course, at the end of the road, some of these EV companies, they are still very new. They won't actually also play a big part, even though if Pentamaster managed to work with them. Some of them are still in concept phase, and some of them cannot even manufacture large scale to cater to the so-called demand. Even Tesla, if you want to buy Tesla now, you have to wait for months. You have to put your name into the booking. The demand is actually outstripping the supply. And in this kind of scenario, there's only so much EV companies can grow. Maybe the share price grow faster than their prospects. And the same will tie back to companies who are servicing EV and also the other green energy or clean energy kind of initiatives. So the share price might really run far ahead, but the results can only play a slow catch up. So these are things you might want to take note of. Yes, prospects is very bright, but near term, a lot of volatility might actually make the price go down. And if that happens, what is your plan and what is your strategy? If you are someone who is, plans and strategize your purchases well, 50 times PE might not be a very high PE for you, and you are willing to double down or average down when the opportunity arises in the near term. As we never know, the market is very volatile. So there you go. Another interesting company. I think business-wise, having factory automation on top of ATE is actually a good thing for Pentamaster. So they have actually another vertical to look and grow, and not to actually come head to head with ViTrox, which is really, really very strong in the ATE sector and business lah. So let's go to the questions and comments you guys might have. No Infinion. So I think Cheng Wen Kai actually, we Kai Ting actually has a lot of insights on Penta. So I think, yes, I think Infinion is one of the so-called key parties that are connected with Penta. I personally never go and dig so much on them. So basically, I just found out who their 52% Reliance customer is. And I just did a big background check on them. And yeah, that's about it. So I think you have a lot of other sources that you have stated in your comment. Is McLean listed? I think they are. Yeah, McLean Technologies Berhad. They are listed in the Malaysia Stock Exchange as well. So EC is saying Penta incurred losses in 2010 and 2012, no dividend payout until 2019, and double-digit ROE from 2015 onwards. ViTrox would be a better choice. Any comments? I think I mentioned just now, actually both have their pros and cons. ViTrox is really very, very strong in their ATE and also their inspection businesses. Even if you compare the profit margin between ViTrox and Pentamaster, ViTrox is around 20+% net profit margin. That means after everything, you invest 100 ringgit with them, they can help you. They will take your 100 ringgit and then they run through everything, they do your business, then they still can get 20+% net profit margin. And this 20% net profit margin is attributable to shareholders like you and me. And Pentamaster can only do at most 17%, 18%, less than 20%. So is ViTrox much better in generating profits? The answer is a yes. But you need to also give some credits to Pentamaster for their automation solutions. So that one is a cut that Pentamaster has a benefit or a so-called strength versus company like ViTrox. Of course, both company would eventually continue to grow, but I don't think you should just say straight on ViTrox is a good company and maybe better in just from a profit margin point of view. But I think Pentamaster, even though it's at around 15 or 17%, they are looking to grow into US and China, and these regions have not fully factor in the so-called prospects and potential there. So you need to also factor that in and say that, yeah, as Junbing said, 17%, but if the revenue can double up, triple up, then the company definitely can go further as well. So next, Darren, is ViTrox much better as revenue not too much dependent from one customer, but more customer country compared to Penta that customer A contribute to most revenue? Yes, definitely. Straight on comparison, you have more clients, you have less reliance, is definitely the best thing. So there are a lot of so-called ideal scenarios. The best is companies like Apple. They sell each of us one phone, and then the next year, if I decide not to change to an iPhone, I change to Samsung, it's okay. The business of Apple will not get impacted. But if you have Apple just selling phones to me and Junbing only, and then next year me and Junbing suddenly switch to Samsung, so there you have your so-called customer concentration risk that will happen. Yeah, maybe next time we should invite you to talk about semiconductor. Yes, definitely. Let's see. One of these days, if we get to talk about another tech company, we will definitely give you a PM. So Intra is saying, can selling ATE generate recurrent income or is it one time off? Not really sure how to visualize this ATE thingy. It really depends on how the company's direction. If you talk about a big company then sometimes they want to upgrade their whole system. They will not straight away throw in the amount of money and upgrade their system accordingly, right? So they can do it in portions. So say, for example, if the company is a very big client, they have plants all around the world, and then they want to upgrade their plants. So maybe the first year will be concentrated in Asia region, and then the second year will be concentrated in Europe region, etc., etc. So once the so-called systems, because this ATE equipment is a capex expansion. So basically, when you buy machines, typically you buy it and then you use it for quite some time, right? You use it until it depreciates, until it hits the maximum capacity, then only you look into buying new machines to cater for your growth lah. So it's not consumables like your FP group and also JF Tech, but it's more on the capex kind of things. But I think for automations and also ATE equipments, some of the companies, they also provide services, maintenance, consultations. So this also is the portion of the so-called recurring kind of money that companies like ATE machines makers can earn. So it's still there's still a so-called recurring portion there. If you buy my machine, then if anything wrong, you can just call me, but I still charge you money for any repairs and also any consultation. So EC is saying that ViTrox directors are keep dumping their shares. Let me see how much they dump. I don't think they really dump a lot lah. So you can see the amount is what 20 plus K, 11K, and bear in mind ViTrox directors are not getting a very huge salary lah. So sometimes they just need to sell off their shares to actually free up some capital for whatever reason they want. So I won't see it as a negative sign. The company has also, the share price has also hit close to 15 ringgit and then come back down to around 14 plus. So if the company really, if the director really sell the share for capturing all their profits, then the share price won't be so stable or even go up lah. So I think just for personal reasons, and the amount is not that much lah.
I think one thing to share like what Jupan mentioned, I think ViTrox directors draw about 300,000-400,000 per year, compared to most of the company that we have shared. They draw about 1 million per year. So they are not that kind of people and this has been true throughout the year. Has been drawing this kind of amount, which is relatively at the much lower side. If you compare the director remuneration portion, so they are not drawing a lot of money for a lot of years. True. And of course, their net worth will be quite high because back in those days, only few dollars, now go to 15.
True, it's very, very true. So yeah, so I think Hai Cheng also have some comments. So in terms of fundamental, yes, so I'm referring this ties back to the so-called observation that ViTrox is a better company than Penta, and but you will miss all the growth potential of other ATE players. And buy one lot of ViTrox equals you can buy several ATE. So it's really your call and how to maximize your return. So I think I agree with this comment. So basically, sometimes just doing a side-by-side comparison based on past historical performance is just one way of picking out a good company or a better company. But at the end of the day, as Chun Bing also mentioned, share price of a company is justified by the growth and the potential, and it's very forward-looking. So based on that aspects, you cannot just straight away disqualify and just say that okay, ViTrox is a better company. Straight away no go for Penta, or straight away you don't study Penta. So I think the ideal scenario is just to study both, and then you pick the one that suits your appetite you're more familiar, we are more comfortable with the risk. If you don't like companies who just rely on one company, then by all means, look more or focus more in ViTrox. But if you are someone who can see the other side of it, focus having such a concentrated client means that they are very good at what they are doing. Just like, for example, Apple also quite focused on a few of their so-called phone manufacturers as well. So I think they only have two companies, Foxconn and another one I couldn't remember. So anything happened to one of these companies, also they jialat, also they cannot sell their phones or make their phones in time, right? So this is also a kind of thing to actually justify the risk. I think at the end of the day, it's not just be scared of the risk, but justify the risk, and then you only be more comfortable when you invest in it. So Francis, not related to Penta, maybe I have missed, is Greatech planning to diversify its customer base beyond First Solar? Yes, one of the prospects of Greatech is that yes, they are already quite growing very fast with First Solar, but if you look at their prospects, they want to focus also on EV. They also want to focus on EV batteries as well. So it's also another sub-segment or quite a promising prospect for them. So side topic, QL drop close to IM6. Is it attractive enough to you guys? Jumbing, maybe I want you to answer first. I never also see that QL actually dropped so much already. Actually, but IM6, what say you, Jumbing?
Yeah, it's getting attractive. I think beside QL, government also dropped some. GCB also dropped a little bit. I mean, you can see most of the money float to bank stock lately. Related. Maybe some big counter are doing the update of their portfolio. You can see it quite clearly. Regardless how fantastic the result released by the Govt stock, the money still goes to bank stock. So is the entire environment quite positive on the vaccine development. So that's why regardless of how Govt stock perform, it's just hard. I would say that the latest QR by Top Govt is one of the highest number. And then this actually equivalent to about 15 PE they are currently in. So attractive or not, it's attractive. But then share market is forward looking. So people think this is the max already. So it's time to move out. That's why it's actually instead of going up, they go down after they release the QR. So
yep.
It means that a lot of people expecting this to come. And then it's just about right to justify back the price that they enter in the much earlier months. And then now they try to cash out. They just sell the stocks.
Very true, very true. Still continue to grow, but it will not grow like your tech companies. It's just very, very stable, and even pandemic come, they still grow. So yeah, 60 times, but worth to take a look. But if you really want to go into this kind of company, you need to play with it very long term. If the share price can go down to 6 ringgit, you think it's attractive, then what if it suddenly goes down to 550? Is it still attractive? It goes down to 5 ringgit. Is it still attractive? Then this is the kind of, it's not more on the valuation part, but it's more on your mental part already. How low are you willing to go? Are you willing to follow the market? Do you still have the capital to actually allocate every time the market plays with your feelings? So that's a question you also need to ask yourself. Valuation is just one portion. After that is your strategy and your psychology. But just basically on the valuation, yes, quite interesting to look at. So another good company, or I would say, I won't say controversial, but I think there's a good and bad side about it. So Serba Dinamik, highly leveraged case. Do you see it positively or negatively? Usually for companies which are in project base of revenue or business, like Serba Dinamik, how they grow is they need to get contract, And once they get contract, then they execute the contract, they fulfill the contract, they build, they do maintenance or whatsoever. Then only they earn money. Then only that they manage to grow eventually lah. So what if they don't get contract? Then they'll be in deep shit lah. So for contract-based company to grow, even like your so-called property development, you always need to grow by your different projects, right? So this kind of company is best to not have high leverage, but Serba Dinamik is having a very high leverage. But you can see how the company is actually going about into lowering their leverage. They have second rights issue already this year, or I would say private placement. And they also issued warrant back then. So all of these are the so-called small measures that the company is actually looking at to actually pare down their leverage. So once they do private placement, they sell out more shares, then your equity goes higher, and then it equals out the higher bank borrowings. And also you also have your warrants in place. If people convert the warrants, and then that also goes to generating more capital or more equity financing for a company like Serba Dinamik. I'm a bit 50-50. I don't like how the leverage currently is, but I think the company is more, how to say, before the leverage becomes a problem, at least they do something now. The one that I'm more concerned would be AirAsia. I think you see, looking at AirAsia, right? They are still in very, very tough situation. And then I already thought the capital raising exercise, be it a debt, be it a borrowing, or be it rights issue or private placement, they should come before 2020. But as of now, still no news yet. Then also that one, I'm a bit more skeptical and more concerned. So at least Serba Dinamik do something now before the leverage becomes a big problem. You're welcome, Darren. Thank you also for tuning in. So Evans noted that KayaPlus has presented several potential tech companies. Would you mind to share which are your top picks to include in your investment portfolio? Again, this is a disclaimer. We already said already. We cannot give you companies to buy or sell. But at the end of the day, so far, I would say most of the companies we share are good in their own way. Sometimes they might just be very expensive. And it's really up to you to justify. I mean, we also shared the prospects of the companies really. You can even dig for more prospects. In terms of risks, we try our very best to find out all the potential risks. You need to also justify the risk. Could be a small one. It could be just for the sake of putting it, or it could really be a very big problem if the company cannot, get over the risk. But I would, instead of just leave you hanging like this, I would just give you some key pointers. So at the end of the day, tech companies have to be growing quite fast. If it's an end stream kind of tech companies like an OSAT, cash has to be quite big, because during downturn that time, businesses will get very bad. At least they have the money to pay out salaries and continue to operate. If it's a very good tech company, they are very proud. They say, okay, I have so-called IP, patents and whatsoever. Be sure they can monetize the IP. You got IP, that means only you can have the technicalities to do this kind of business. So you must sell it very expensively. If you don't sell what you can do cheaply. So these are the so-called pointers to look at. If you want to rewatch back the past companies, feel free to do so. And what else? The company must also be very aggressive and in growing. So what they are now, yes, it's a great achievement, but companies need to become bigger, better, and stronger. So look for what they are targeting to do next. A lot of our tech companies that we touch, they are always looking to do new things. They want to venture higher upstream into the semiconductor, higher value chain, upstream kind of business. So yeah, keep a lookout at them. Some of them, they just talk only. I think you just need to follow out and see whether they walk the talk or not, or they just talk for fun only. Penta's factory automation solution similar to mykayaplus. I think mykayaplus is more semiconductor centric. So they purely or more focused on the semiconductor kind of automation. I think Penta one is more broader and wider as well. Intra is asking why Penta Hong Kong does not get up as much as in Malaysia. Very good question. I also don't know the answer.
Quite far away.
Yeah, quite far away. If you look at Penta Hong Kong, I think the PE is around, let's see, Penta International.
Quite far away.
Quite far, right?
Yeah.
And I think when Penta Hong Kong went IPO, a lot of not to say a lot, some of the so-called other investment gurus have been advocating. Yeah, you have to invest. I mean, the so-called PE ratio that it is selling at in Malaysia versus what they are trading at in Hong Kong is a huge difference. Just buy and then hope that the PE will actually somehow come in the equilibrium. Sometimes things do not turn out that way, and it's quite dangerous to just do such kind of assumption. Because at the end of the day, price is what you pay, value is what you get. Malaysians, maybe we love Penta very much and are willing to pay a high money for it. But people in Hong Kong, maybe there are bigger fishes in the Hong Kong share market. They couldn't be bothered at looking at the so-called semiconductor end stream or supporting kind of service company producing these kind of machines, or maybe they don't have the knowledge on the end stream kind of semiconductor business. So a lot of questions or a lot of answers that we don't know. But I don't think you should. But I think the lesson that we should learn is that what happens in Malaysia does not mean it will automatically happen elsewhere. Same goes for Top Glove Singapore, Top Glove Malaysia, and Top Glove, even if it goes to list in Hong Kong as well, it doesn't mean that you can straight away say that, okay, if the IPO valuation is cheaper by a lot than Malaysia, then you subscribe to IPO and just pray that magically the share price will just shoot up to the same valuation in terms of Hong Kong or in terms of Malaysia or in terms of Singapore. Share market doesn't work that way. How do you compare Penta versus Greatech? I think both are different companies. Penta's business model is more well spread. I think Greatech still too much focus on solar, but hopefully they're able to grow their battery business. So, but if you look at in terms of prospects, in terms of growth, if green energy, clean energy were to pick up very fast, then you might find that the valuation for Greatech could be quite acceptable, judging by the fact that Joe Biden is the next US president, and definitely there will be more initiatives in terms of clean energy and also solar energy and all the other EV kind of initiatives.
I think something to add on. The margin that Greatech managed to get in factory automation is much higher because they are quite specialized. And what I forget the actual term already. The one that First Solar is in, it's not the common solar panel board that manufactured by the rest of the world. So that's why Greatech is having a very lucrative return from this client alone, because they give them customized solution.
Niche.
Very niche. And then when they go to other place, they need to review the whole thing. So this is one of the things to take note. But the factory automation in Pentamaster is kind of generic mainly for medical industry. And then the margin is also huge. Even though we say they are getting about 15 to 16, it's actually a mixture of the ATE side and the FAX side. So the ATE is much higher compared to the factory automation. So this is the difference between going very specialized and going general. Pentamaster definitely is much more general compared to Greatech, but they serve more industry.
True, true, true. So yeah, I think I don't know how is the market today, but yeah, market goes up and down. You cannot. I don't have a crystal ball to time the market. I can only. This is the thing. I keep on reminding myself, and sometimes I remind Chun-Ding. Sometimes we just cannot hope to buy at the lowest price. Sometimes it's just what you can do at the present moment. If you look at the price now, oh, this price is what I want. Of course, different people will view it differently. Some people will see it through a technical analysis perspective. Some people, like what we do, value investors, we just look it based on the company's potential, the prospects, and then what is currently selling at as of today, as of the current moment. If it's attractive, by all means, do your due diligence, and then yeah, if you want to buy, if you want to wait further, it's all up to you. But to wait for a miracle to happen is something quite impossible. I think the best thing is to do is, even for value investors, we sometimes are excited when the market is red because it means buying opportunity, right? So you shouldn't be too scared about it, and learn how to just manage your money, have sufficient money on hand to just take advantage when there is opportunity lah. So yeah, it's healthy. It's definitely healthy to have retracement so that the market can continue to grow up in a very long run. You guys are very enthusiastic today. But yeah, let's go on. Let's try to finish it before 10:30. I don't want to take up too much of your time as well. So we'll just quite quickly bounce through the questions. So what are your thoughts and prospects about Scientex? They still keep growing for their plastic packaging and board division. Yes, surprisingly, if you look at, you compare a question back to the question that Intra asked just now, saying like he couldn't visualize how ATE equipment kind of business work. So for plastic packaging, straight away, very straightforward. Every time your customer, be it a bread manufacturer, be it a biscuit manufacturer, every time they want to package a product, straight away they will use your products, which is a plastic film or whatsoever. And then, every time you make, every time they finish using the plastic, it gets thrown away, or finish using it, then you buy a new one from you. So it's a consumable and stackable business. If your biscuit manufacturer client can grow business, then definitely automatically he will buy more plastic film from you. Straightforward. Consumer business can stack and grow faster. Property division will be slower, but when they went into property, a lot of people were skeptical lah, but they just managed to do it lah. And it's such a tough, competitive business in the Malaysia side to actually go into property, but they just managed to do it. So have to give them applause and recognition to actually succeed in the property business. Yes, they can definitely still continue to grow based on their past result and also how they govern the company. So Wan, I just watched the video you guys made on Franken 3 months ago. Thanks. Thank you, Wan, and we are thankful that you are able to catch us live today. We take up 1 hour of your time. Hope you learn a lot today. Can we have a session on cybersecurity? Good question. You see, mykayaplus have been doing Not So Late Night show for quite some time already. I think this year, since May, we have been doing every Thursday, non-stop. No holiday, no whatsoever. And a lot of it has been based on Malaysia stocks, and cybersecurity is one of the stocks that maybe you don't find so much in Malaysia. Maybe we are looking to also do something similar, Not So Late Night show, but international version. So you have stocks in the US, stocks other parts of the world. Definitely we'll try to look into the possibility on having cybersecurity companies as one of the topics for the international version. What else? What's your opinion on Pentamaster HK? The share price seems sideways for quite some while. So, for Pentamaster Hong Kong, I think it ties back to previously what I mentioned lah. You cannot just expect the Hong Kong share to trade in tandem in terms of valuation with the Malaysia one. Straightforward lah. So you cannot just pray and hope that things remain the same as always lah. So what else? Any tech stocks have the potential to be world-class companies like Topgrowth and Hata? I think a lot of tech stocks are world-class. ViTrox consider, just that they don't have a pandemic to boost their earnings. Penta is also quite famous as well. So just because tech stock don't have pandemic-driven kind of growth and profit doesn't mean they are not world-class.
I think they are world-class, but a lot of it is like your Malaysia is usually not on the upstream player lah. Upstream player is like Quadcom, Broadcom, the kind of players that typically only appear in China or US or maybe Taiwan or Korea. So this is the one that we can't really have it in Malaysia, be it because of talent or whatever. No, this is the lacking part. But in terms of the manufacturing side of things that supported the industry, Malaysia got quite a few numbers of players, and it's very specialized. For example, JF Tech only do test socket, and then this is the only thing they do. And then ViTrox doing machine vision, doing some inspection, this is the only thing they do. It can be quite specialized, but it depends on whether they are diversifying their customer portfolio. That one depends. But what they do is quite specialized, and usually mid to upstream is quite rare. A lot of them is actually mid to low stream.
True.
That's why it's not famous.
Okay, so I think kind reminder. Diversify your portfolio is very important. This we also agree. So last question. I think this one is also a very interesting question. Maybe I'll also let Chun Bing answer. I let Chun Bing answer first. What are your thoughts on software companies in Malaysia? Since previously you have been coming from the consultation line, will you look into a Malaysia software company to invest?
I think if you talk about software services in Malaysia that is listed, and then which is something that you can relate to Industry 4.0 is very, very rare lah. Usually the one that is related to Industry 4.0 is all the manufacturing company. Penta is one of it, ViTrox and so on. And a lot of so-called good software company or they turn it into services are the one that's still in startup mode, be it Grab. But of course, Grab is not Singapore. A lot of software is now in the startup mode, not publicly listed yet. So it's quite hard to find an ideal one that's doing software services and then can ride on the bandwagon of Industry 4.0. It's quite tough lah. Unfortunately, this is what happened in Malaysia. But from startup perspective, I think there are a few. Of course, you only accept private placement from VC, and some of them go through equity crowdfunding. So that one is much higher risk kind of investment scheme. Need to play with extra careful, double, triple careful lah. Yeah.
Yeah, true. Probably I would add from my side is if you talk about software, right? I mean, sometimes we also need to ask ourselves, say for example, there is a software company in Malaysia and you want to invest in it. You need to ask yourself, is this software really so powerful that it can grow within Malaysia, first of all, then it can grow outside of Malaysia? Because if you look at some very successful example, say for example, everyone using computer, when it comes to productivity, you have a lot of choices, right? But at the end of the day, a lot of us, we still opt for Microsoft Office because there's this kind of sticky factor and we have been using it for donkey years. And Microsoft themselves, they also have been keeping on to innovate and improving their softwares. So when if a software is really that good, because once you have a software, you can just sell it to anyone. Sell it to me, they earn one-time money, and if it's a subscription basis, every year I need to pay Microsoft to continue to use their Microsoft Office. So after they sell it to me, they'll sell it to you, they'll sell it to Chunbeng, they'll sell it to practically everyone else. And this is only how the company can grow. Yes, Malaysia has software companies, but I do not see a strong one actually come close to actually grow into a very huge business in Malaysia and then eventually go out of Malaysia. So you will be capped by the potential hit ceiling that you cannot fight with the international boys like Microsoft, Oracle, SAP, blah, blah, blah. So many software companies out there that can actually be more attractive as an investment compared to the local software companies. Okay, I hope we give you a so-called a pinpoint. Software, it is best to actually look for the big boys or the more up and coming one.
I think Malaysia software probably linked to government link services like Senseoft, Excelforce. I mean, very little. And if you wanted to link it to Industry 4.0, it's not really lah. But government PH 2.0, government PN 2.0, then maybe lah. If you can analyze what is going to happen lah, then maybe lah.
Yeah. So that also maybe ties back to the so-called NIS project, the so-called immigration one, getting the government contract to actually provide technical solutions, softwares to the immigration. So that one is also for me is very one-off. So I cannot justify, I cannot quantify. It's just pure bad lah. So I cannot just find a good software company to actually invest in. So maybe you can just bet on it, and you get it lah. You cannot get it, then too bad lah. Then you sell at a loss lah. So that's just how the software condition is in Malaysia lah. So last question. Other than stock, what other asset class you guys are investing or trade? I think for me, 99% is equities lah. Just that 1%, I think not even 1% is cryptocurrency lah. But I don't trade lah. That one is just a position that I just initiated quite some time ago. It's not a big amount, and I just hold it lah. Just lazy to do anything about it lah. Chunbeng?
Used to have quite a bit of number in cryptocurrency, but sold already lah. Back then, but I think now is a special time lah. Definitely, stock market is one of the things that you can hedge against the inflation, and especially on fiat that is getting cheaper and cheaper. Our friend in US keep on printing money like nobody business. It will definitely dilute the currency across the world. So that's why a lot of things that went up already, be it gold or Bitcoin. But of course, now stock market come back on, and then gold got corrected a little bit. But it's already historical high compared to previous 5 to 10 years. But then Bitcoin, they see it like a digital gold lah. But like what Joban always say is Bitcoin is a proxy to this thing, and blockchain don't really have any tangible application beside cryptocurrency and also ICO, like initial coin offerings. This is the only two tangible application until now from blockchain technology. They say a lot of things about decentralizing the property asset, decentralizing about the finance. All these things didn't really turn into tangible stuff. But of course, in
True.
long term, they are turning into a position like digital gold. Definitely, they will have some form of value into it, and then it will somehow behave like gold, and Litecoin will behave like silver in a way. So this is some of the things you guys should take note lah. But there's some other interesting movement like ETH, what is the name called? Ripple, XRP, and so on. These are a few interesting ones that you guys can take a look lah. But of course now is very, very high price. And stock market back up, all those things become bullish. Bitcoin might not hold the position again.
Yep. Yeah. So I think yes, eventually cryptocurrency or blockchain will play a big part in our future lives. That one, I kind of agree. But there are so many coins out there. It's just too difficult to pick the one that we are going to eventually hold on or proceed with. At the end of the day, cryptocurrency just wants to be the sole controlling currency to unite all of us, right? So there are hundreds of them out there, and each of them have their own pros and cons. So how do you know you are holding on to the right cryptocurrency right now, right? So for me, I think rather than to just bet a huge sum on just a specific coin, I would invest into companies which are advocating or looking into blockchain. There are companies out there like I think Tencent is having some initiatives there. Alibaba definitely is doing something there also as well. So that would be a more applicable point of view to bet or to leverage onto blockchain and the potential lah. So yeah, I think Intra, we speak about MMYG, already sparked Intra to come out with a recommendation as a candidate for the next Not So Late Night show. Yeah, I think if you look at MMYG, the numbers are very nice. Just that particularly, I don't like the business when I look into it deeper. But yeah, definitely we can take a closer look if we talk about it as one of the upcoming companies. So yes, thanks for the sharing and thanks for the watching. Yes, if we have a good company, yeah, definitely will ping you and you appear as guests on Not So Late Night Show. For any one of you, not just Kai Cheng, if you are so-called, how to say, you are interested to appear, discuss, talk stock with us through StreamYard, let us know, leave us a comment, tell us your so-called interest whatsoever. Yeah, we will definitely be happy to feature you guys in our Not So Late Night Show. At the end of the day, I would like to re-emphasize, it's not us coming, it's not just me, Chun Bing, coming and see you guys online. It's an interaction. You see so many of your comments. So your comments actually take up 30 minutes of the 1.5 hours really. So it's not just us answering your questions. There's also a little bit of sharing and opinions or whatsoever. So I hope these 1.5 hours today have been very, very fruitful, very, very educational, and it's well spent. But that's for about it. I think we cannot go on further. Some guys need to go and rest. Tomorrow is still a Friday. And yeah, we'll stop here as always. See you guys next Thursday, same time as always, 9 to 10 p.m. Hopefully 10 p.m. we finish on time. And stay safe. Condition in Malaysia is not improving. Just take care and we'll see you next Thursday. Bye-bye.